As property prices continue to soar, many of you may be wondering, will the market crash? Are there still golden opportunities out there? Hey guys, Ben here, and today I will be helping you to answer the question of whether to enter, exit or wait with the current state of the property market today. With the recent batch of cooling measures in 2023, it is natural to be a little hesitant about entering the market now, especially when we are a little uncertain about its real impact. But let me walk you through what these cooling measures are and what they mean. Essentially, ABSD rates have increased again, but this time they are mainly targeting foreigners, with only a slight increase for second and third time Singapore citizen and PR buyers. Now, these cooling measures were intended especially to make sure people buying homes really want to live in them and to limit these foreign and local investors that are looking to make a profit. Clearly, the priority for the government is to help regular Singaporeans get a home. However, that doesn't mean opportunities are totally gone. Generally speaking, we can expect housing prices to continue to moderate, making it a bit easier for regular folks to afford homes as investment demand is now driven towards commercial and industrial properties. And here's the interesting part. If foreigners decide to stop owning homes and start renting, what do you think will happen to rental prices? If you're a landlord that owns a property that foreigners like to rent, this may be good news for you. This could also spell good news for buyers looking to enter properties located in the core central region, as foreigner demand is lower and prices will start to moderate. After all, foreign demand is what largely drives up the high-end property market in Singapore. Other regions seem to have been affected minimally, if any, when we consider the incredible performance of recent new launches like Tembusu Grand and the Reserve Residences. It appears like great prospects still continue to hold true for many properties in Singapore, especially for properties located outside the city amidst these cooling measures. Now, with all this in mind, now you're probably thinking, so is this the right time to enter or exit the market? So let me provide you with 5 key indicators for you to make an informed decision. Firstly, the first indicator we have to look at is what is the current market sentiment? And one clear indicator of that is to look at interest rates. The question we have to ask ourselves is, do most home buyers enter the market when the interest rate is high or low? And with the US signaling 3 cuts coming in 2024 and core inflation now down, what do you think will happen to property prices once the interest rate is cut? If you are a seller, now might be a good time to consider upgrading your property. And if you are a new buyer, now is the best time to enter the market before the demand picks up and drive prices up further. Secondly, let's look at the stock market. Now, we all know that property prices parallels how the stock market is doing. When the stock market is booming, people feel richer and thus are more willing to invest in properties. Now look at this chart here. It shows the correlation between the STI and property prices. When the STI increases quarter on quarter, non-landed new home sales per square feet price also follows suit. And with the S&P 500 hitting a record high in January 2024, consumers are likely to return to the property market soon. The third indicator to look at is the general economy. And for this, we have to look at GDP and GDP growth. As we can see on this chart over here, when GDP is low, it provides opportunities for buyers as they can get properties at a more favorable price point. However, MAS has also said that Singapore's growth is set to improve in the second half of 2024. When the economy grows, what do you think will happen to property prices? The fourth indicator to look at is the average household debt. According to this article by MAS in November 2023, Singapore household debt fell to the lowest level in over a decade due to rising income levels and also high interest rate, which prevents overborrowing. When sellers are not in an over-leveraged position and do not need to sell cheap, what do you think will happen to property prices? Do you think that it will continue to fall? Now, the fifth indicator to look at is the level of supply in the market. As of third quarter 2023, there are approximately 16,000 unsold units in the market, which is relatively low if you compare it to the previous years. Developers have also been very conservative in their pricing, but with interest rate likely falling in second half 2024, a rising stock market and a booming economy, what do you think developers will do then? Now, despite all these cooling measures in 2023, both HDB resale price and private residential price both grew, meaning that properties still have opportunities for growth. In fact, nowadays we are starting to see more and more million-dollar HDB transactions taking place, and it's becoming the norm. And now this climate benefits both buyers and sellers, as sellers are able to exit their properties for a profit, while buyers can still expect to get capital appreciation of their property over time, provided they enter the right property at the right price. Now let's talk about TOP projects. As you can see over here, there are many recent profitable transactions, with recent sales at Amber Park fetching a profit of up to $300 per square feet for 2-bedroom and more than $400 per square feet for 3-bedroom. And we see the same trend for other recent TOP projects like Dairy Farm Residence, Treasures at Tampines, and the Florin Residence. And these are largely driven by HDB upgraders and buyers who have been sitting on the sidelines for a while. So the question now is whether to sell or wait for even more capital appreciation, and what are the risks involved for each option. But I would say the most important question to ask yourself is, what is your long-term goals and needs? Because everyone's situation is different. Now let's talk about new launches and whether new launches prices are sustainable. If you're looking to enter the market as a first-time buyer, let me get you started with some valuable insight. As a first-timer, you may want to enter a new launch project after hearing about all the great growth potential and capital appreciation. However, you may be thinking, new launches now are so expensive. Can you enter now? So let's examine the actual profitability of new launches and how buying selective new launches at higher prices can still end up making a good profit for you. The truth is, despite its high entry price, new launches are still very good as an investment. It's all about understanding where the growth sectors are in Singapore and identifying a safe entry and exit price. And one good area to look at is the One North region, where there are many big MNCs and tech companies, but an undersupply of private residential units there. So, for those of you who are looking for a safe entry property, no need to look any further. I'm going to share with you 2 critical keys to spot a safe entry property. First, let's look at what a safe entry price looks like. And we'll use Hill Haven as a case study. Prices for Hill Haven starts from 19xx per square feet. Now, is that a safe bet? If given the choice, will you buy a resale or a brand new project if the price is the same? Let's examine recent transactions for resales around the area. We can see that many prices have crossed 1,800 to even 2,000 per square feet range, which is the same for existing new launches even outside the city. The second key to look at is the government master plan. If you enter an area before the growth story happens, what do you think will happen to property prices? Imagine buying into Punggol years ago before it was fully developed, or into Jurong before the Jurong Lake District was announced. The question you have to ask yourself is, where is the next growth story happening? And if you go in early, you will definitely enjoy the first mover's advantage. I want to share with you a story of how I personally enjoyed the first mover's advantage. In 2019, I bought a 2-bedroom at Avenue South Residence due to the Greater Southern Waterfront developments coming up. And fast forward to 2024, it has appreciated by more than $300 per square feet, simply because I entered the right project at the right time. In today's volatile economic climate, understanding all these factors is crucial in order to make the right decision in the property market. One right move can easily make you 6 figures, and one wrong move may be very costly. If you are looking to enter or exit the market, feel free to drop me a text or an email, and I can help you to come up with a customized plan to meet your goals. Once again, I'm Ben, and I'll see you soon.